Hello there, welcome to the programme. It's been a disappointing week with US payroll numbers weaker than expected. We've had declines in Europe. There's been protests in Greece as well over tax reform. So a bleak first week of May really. But what does this mean for the week ahead of us? Let's have a look at the economic data that awaits us then, shall we? So on Monday, we've got Bank of Japan meeting minutes, China trade balance, Australia business confidence, Japan consumer confidence and Germany factory orders. On Tuesday, we've got China inflation, we've got Germany industrial production, France industrial production, UK trade balance, US wholesales inventories. On Wednesday, UK industrial production, US mortgage applications, UK GDP estimate and some oil numbers as well. Thursday, France inflation, Eurozone industrial production, and it's Super Thursday, we have to remember too. So we've got the Bank of England interest rate decision, we've got an inflation report too that we are going to dissect. Added to that is US import and export prices too. Friday, we kick off with Germany and the GDP number as well as inflation, France GDP, Italian GDP, Eurozone GDP, US retail sales and consumer sentiment. Well, I mentioned it there, Super Thursday. So we're going to kickstart with that one, shall we, Chris? Because it's all about the Bank of England, isn't it? This rate has been there rather a long time, hasn't it? Are we expecting anything different?
Not in terms of the rates or indeed the voting pattern. Still expected to be 9-0 to keep rates unchanged. QE, of course, stays the same. The big debate will be what crops up in the statement we get at the same time and, of course, the inflation report. Now, the Bank of England has moved away from the idea that it would start increasing rates this year at all. I mean, the jury is still out whether the Fed will move again this year, but certainly the Bank of England is a very distant prospect at best. And I think you might even get some discussion over whether lower interest rates would be possible. We've seen the Bank of Japan go for negative rates, we've seen the ECB, a host of other ones as well. Australian Central Bank cut rates this week, so the possibility is there that the Bank of England actually starts to see a growing caucus of policymakers that think maybe now we should be looking at cutting rates in the UK as well to help offset concerns about Brexit. Of course, that's come through in economic data this week. And also widening concerns about the global economy. So it would not be surprising, I think, to see that discussion come through. If you look at sterling, if you look at the pound against the US dollar, we find ourselves declining for the fourth day in a row. And if you can see from the chart, you can see how this has been really under pressure the last few days. Now, we're holding above 144.50 for the time being. But, and if I delete some of these objects on here, you can see the trend more obviously, that we are still heading, I think, downwards. And if you get, for example, some better US data later this in the coming week, that might give more strength to the US dollar. That might continue to put the downside on the pound. We're still off the lows for the year, but you can see how we've fallen back, and the risk is now that we continue to see these declines. So if the Bank of England is cautious on the outlook, if it's dovish on economic policy, then you could start to see the pound continue to lose ground against the US dollar.
OK, well, you mentioned some better US data. Obviously, we've got a lot coming out next week. We're going to pick up on the retail sales and also consumer sentiment too. How's that going to feed into the euro dollar? Yeah,
so we've got most of the big hitting US numbers come through later at the end of the week in what is, let's face it, a slightly quieter week for economic data than some we've seen. But the euro has continued to do well over the longer term against the US dollar, but we have pulled back from that 115 level, so it's been 4 days. Again, it's been dollar strength here rather than euro weakness of gains for the dollar against the euro, and the euro therefore declining. If we get back below this 114 area in the coming week, that would sort of set alarm bells ringing, I think, for this rally, and you could see it begin to lose ground. So better retail sales data at the end of the week, which is expected to improve from the previous month's poor number, and also that Michigan confidence number at the end of the week, which is also forecast to get better, might mean that you start to see this dollar rally get a bit more strength in it, which would suggest maybe down to 112.50 in the short term for the euro, potentially even lower.
All right. Well, let's move our attention to talk about the corporates because we've got a lot on the way. We're going to start with Monday, of course. We've got the CBA there, Greggs, if you like your pastry, Natixis too, and Liberty Media. On Tuesday, it's a slightly busier day as well. Lots of people jetting off at this time of year. Budget airline EasyJet is on the list. We've got some financials too with Credit Suisse, ThyssenKrupp too, and MAN, and Walt Disney as well coming out from the States. Obviously, Star Wars has been a massive moneymaker for that particular company. Wednesday is extremely busy there. You've got an eclectic array, Experian there, Metro, Eons. You've got some energy giants, Alliance, Deutsche Post, Carlsberg for a beer or two, and TUI. I mentioned obviously we're in holiday season, gearing up to the height of it, certainly. I'm going to Mexico next week. I just thought I'd mention that. ITV, this is a big one. Yes, we're going to actually discuss that in just a second or two. It's been buying up a lot of programmes. It's got Poldark now, my favourite. We've got Old Mutual on there as well, Nissan, Khan Energy, Zurich Insurance, Euronext. And on Friday, it's a quieter one there for the corporate there. Honda is on the list though. All right, so let's pick up on ITV, because ITV now is kind of changed its tune, hasn't it? Because obviously, once upon a time, it was all about advertising, wasn't it? Those advertising revenues. But actually now, acquisitions, programmes, as I said, I did mention they've got The Voice now. They've also got Poldark as well. Big money makers have to be X Factor. Downton Abbey's gone. Of course, they've got Britain's Got Talent. But it's all about these programmes, these quality programmes, and potentially selling them on.
Yeah, it has to be really, because advertising is the big concern that you are seeing a slowdown in that key area of ITV's revenue. Now, the shares are down 20% from the start of the year. We've had investment banks coming through the last couple of weeks saying the outlook is quite dire. We're worried about the impact of people not just spending less on ads, but even watching less TV, in a sense, on their TVs, actually watching them online on demand. And that means they won't watch the ads quite so much. You're seeing ITV's pricing power, if you like, being eroded. So the concern is now that actually there's downtrend in ITV shares that you can see on the chart, that we've been losing ground consistently since the beginning of the year, down 20%. We were up at sort of £2.80 a share right at the end of 2015. Now we find ourselves nearer £2 a share. And you can see on today, we're down 2% now, potentially going to its lowest level now in over a year. So it's been a big corrective in ITV shares. And crucially, it doesn't look as if things are going to get better. So the firm has a major issue in sort of spinning a good story this week in its trading update. So that's, I think, the first big name to watch out for.
Okay, and of course we've got the European Championship as well in the summer. Maybe people would be sat down on their sofas for that one. All right, let's talk about something entirely different. Well, not really, because you'll be at home watching television in your home. And we're going to talk about house builders, aren't we?
A number of trading statements from house builders this week as well. We looked on that list. The question is now, does one of the strongest rallies over the past 3, 4, 5 years have further to go, or is it about to drop off a cliff? Now, the feeling in the investment banks is that it might actually start to look quite dire. And this week's economic data, the UK construction PMI we had, also adds to that, because that weakened to one of its lowest levels in a number of years. In fact, UK data this week has been generally poor, certainly below par at best. And if you suggest that this means the UK economy is weakening, then house builders are key, and they're facing two key pressures at the moment. One is the fact that house prices, or growth in house prices, are starting to stall. So major problem there. The other one, they're being hit from the other side. Inflation, cost pressures, wages are starting to rise. So you've got one positive factor diminishing and one negative factor increasing. So they find themselves in a bind. If you look at house builders on a valuation perspective, they're trading about 9-10 times earnings. When you think the FTSE 100 trades at 17 times earnings, that sounds like a bargain. You think, well, snap up, the rally continues. But if you look beneath it, if you look at the projected growth rates, they're actually trading on about 29 to 30 times earnings, which is a lot more expensive than the broader market. So you would suggest that investors will move out of the sector, sell the shares. They've done fantastic well the last 5 years. So watch this week what the house builders say about house prices, what they say about inputs of costs, how they're rising, and what they say about demand. Because actually, we could start to see this great rally in the sector finally start to come unstuck.
Ooh, okay, tricky times ahead. All right, thank you very much indeed. That's Chris Beauchamp there, just going through all of the week's economic and corporate data that we're looking forward to on the week that starts off on May the 9th, so the second week. So it seems like people aren't selling in May and going away right now. No, we don't want you to go away. We want you to stay, but I'm going away to Mexico next week, so I won't be here. But the sun is shining here in London, so if you are here, have a fantastic weekend. Goodbye.